Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. The SP 500 is back to its all-time high. We're going to talk about that today. We're going to talk about everything that was discussed in the last video where we discussed the market environment that was deteriorating and beginning to switch to a riskier environment than what we've had since the March low in 2020. We've really been in this intense high risk environment right up until April 2021, and now we're slowly starting to see signs of that environment deteriorating. Now, if you are new here, make sure to smash that subscribe button because I'll be here helping you navigate through these markets every step of the way. Now, without further ado, let's get right into it. So in the last video, we talked about the TLT to JNK ratio that was breaking out here. This is the ratio between high quality and poor quality bonds, and it's usually a good metric of what kind of an environment you're in. Are you in an environment where investors are willing to take more risk and buy higher yielding but poor quality bonds, or are you in an environment where investors are seeking safety in treasury bonds? You can see, for example, this breakout in January 2020, right before a 30% drawdown in the stock market. This was in January, I believe. The market topped in February. So this was a pretty good warning signal. So we're going to talk about exactly what's happening on this ratio right now. What do we expect and how it's going to affect the stock market? But before that, I want to take a look at the short-term picture of the SP 500 because there's some big things going on the charts in the short term that I really want you guys to be aware of. By the way, if you learn something new in this video or you find it useful, make sure to smash the like button and don't hesitate to share this video on social media or with your friends. Now let's take a look at the actual price action of the SP 500. So we're obviously still in a very bullish structure. We had that major breakout here. This is a long-term level, right? A huge long-term level. I can't show you on this chart. You can take a look at the last few videos. We've been looking at this trend line for weeks, if not months now. And we obviously broke out, back tested, and we're now trading within now another smaller price channel that ranges from this line of support and this line of resistance. We've had 1, 2, and now we're testing this level for a third time. Now, if we take a look at the daily chart, take a look at that RSI reading here. We had a huge overbought reading back in April 2021. And since then, we've seen the momentum just die off as the S&P 500 just keeps on making new all-time highs and yet is unable to break above that resistance line. So what does that mean? Is that bearish? Is that bullish? What I can definitely tell you is that this is not a place where I'd want to be taking long positions. Divergences like this do not predict corrections, but they tell you that momentum is weak relative to the actual price action. The only bullish scenario that we see on the S&P 500 right now would actually be a breakout above this level, and that would burn through these divergences and renew the momentum, and we'd go into kind of a parabolic move if we have that. If we have that type of breakout, look out for a large move up. But if the S&P 500 is not able to break above that level, then that confirms the weak momentum, and we'd be looking for a move down here. Now, that's our preferred scenario, and I'm going to show you exactly why with another chart. And this is the chart that I wanted to show you guys. This is the market breadth of the S&P 500. So it measures the number of stocks that are above their 50-day moving average, and it gives you this oscillator, right, between 0 and 100. 0 being none of the stocks of the S&P 500 are above their 50-day moving average, and 100 being all the stocks are trending up massively. Now, the way this indicator works, and we've taken a look at this a few times before, is by taking a look at the divergence in breadth. So when you have the price continue higher and yet you see this percentage go down as the market rises, that's usually a warning signal. You can see here throughout 2015, markets continued higher, and yet the number of stocks that were trending up came down. Now, you also had significant divergence before the repo crisis market crash. Here you can see a significant higher high on the stock market, and yet the market breadth is making its way down. Now, that's not perfect. What's interesting about that period, if we zoom in a little bit here and take a look at this in detail, you can see right at that top, at that all-time high in 2018, look where the market breadth is. It's falling as the market is testing all-time high. That's a big warning signal. Seeing such a weak market breadth reading when the market is at all-time high is just not something you want to see. Now, again, in this correction, you can see price is rising, market breadth is building divergence, and then you have a nice little correction. Now, we even got a very similar type of situation back in 2020 in February as the market was topping. Same thing. Stock market is at all-time highs, and yet the market breadth is very weak here. That's a warning signal. You don't want to see that. But what's the point that I actually want to get to? Let's fast forward to 2021, zoom in right here, look at what's happening. We have the stock market at all-time highs, and yet the market breadth is so low. It's so weak with the markets at all-time high. I don't like to see that. This is definitely not an environment where I want to be going long on the SP 500. Now, keep in mind, this is the 50-day moving average. This is short-term stuff. This does not predict 10-15% corrections. It predicts smaller move downs. Look at this. Right here, you had the price rise. The market breadth was weak as the markets were topping here in February 2021 with the breadth right here making a significant lower low, and that led to a nice 4 or 5% correction. Now, the steepness of this divergence is definitely impressive, and that could suggest that we're going to see a larger correction. But right now, that's not something we want to speculate on. As I said earlier in this video, we'd be looking for a correction back down to test the bottom of this channel. Now, again, I really want to be clear about this. Divergences do not guarantee that a correction is going to play out. It gives you higher probabilities that it's going to play out. What we do with our capital, what we do with our members on gameoftrades.net is to adapt to those probabilities. But this is definitely a very interesting situation that's building right now. And by the way, if you haven't already, make sure to hit that like button as hard as you can. A lot of research and effort goes into making these videos. We really want to push out this content to as many people as possible, especially these types of videos that really highlight a high probability of a correction that could save some new investors some pain. And go and check out gameoftrades.net. We cover all this stuff in so much detail. We follow up on our analysis of the markets, on the probabilities of corrections at every single point in time, whether it's a good opportunity to step in, a good opportunity to get out, book some profits, short the markets. And obviously, we discuss so many other opportunities in cryptocurrencies. And we also recently posted an article called The Rise of the Green Decade, which we believe to be a massive opportunity going forward. We'll be dedicating a part of our service to discuss exactly how to take advantage of green investing in the most profitable way possible. So now that we've taken a look at that short-term picture, let's take a look at that TLT to JNK ratio to determine whether we're in a risk on or risk off environment, right? We talked about that in the beginning of the video. When this ratio is dropping, it means investors are willing to take higher risk. If it's breaking out, it's an early warning sign that things might not be so good for the stock market going forward. Now, I can obviously go back further and show you more examples. Back in June 2008, you had this breakout here. And I do believe that from that point on, the markets dropped 50% down to the low of the financial crisis. Same thing here, April 2010, the ratio broke out just before a 10-15, maybe even 20% correction back in 2010, and same thing in 2011. Big breakout before correction. So that begs to ask the question, what's happening right now? Is this a real breakout, or was this just a small fake out move before continuing this risk on environment? So to take a look at that, we need to watch what's happening on TLT and JNK separately. So let's take a look at those charts. This is the chart that we've been looking at on TLT. So this is the Treasury bond ETF. This has an inverse correlation to interest rates. And so when interest rates drop, it means that treasury bonds are rising in price. Now, if we see a big breakout on TLT, that usually suggests that the S&P 500 is not going to fare too well going forward. Stocks and bonds, and this is something we've said multiple times on this channel, they have an inverse relationship short term. You're typically not going to see stocks and bonds both perform extremely well. They typically have an inverse relationship, which is what defines risk on versus risk off. Are investors looking for safety in treasury bonds, or are they looking for risk in stocks? And so you can see what happened recently. We had that nice bottom, a nice rally, and TLT has encountered resistance here. This is the level we were watching at 145. We said if we break out above that, that starts to look extremely bearish for stocks. It confirms that we're in a risk-off environment and we'll be looking for a significant drop in equities. All right, that could still happen, but right now, as I'm making this video, we're being rejected. We still have a nice level of support here. So we're really in this zone of indecision on TLT. Strong support at this level here. This is a nice price channel support. We zoom out, I can show you what that corresponds to. Big price channel on TLT we've been looking at. So price is currently sandwiched between this resistance line that's pretty well defined and this price channel support. So once it picks a direction, we'll know whether we're risk on or risk off, and we'll be adapting our positions accordingly. Now on JNK, so this is the high yield bond ETF. So the junk bonds, high risk bonds, but high yield as well. Now, typically during times of economic crisis, junk bonds tend to fall extremely hard and massively underperform the market. Now, more recently, we had this trend line here that was acting as support, and we tested that support. We haven't broken this line of support just yet. So the technical picture is not strong on JNK. It's clearly losing momentum, but it hasn't broken down either. So we're definitely still in somewhat of a risk-on environment. The technical picture hasn't broken down just yet. As long as JNK is trending up here, we're making a higher high right there. As long as it's trending up, we can expect investors to continue taking on risk. Now we are approaching a strong level of resistance. Perhaps that's the area where we're going to start to reverse and see a larger correction. If we see that type of drop on JNK, and that's also accompanied by a nice breakout on TLT, that would start really looking bad for the markets. But right now, that's not the case. It does seem like things are starting to change in the markets, and we're no longer in the same high risk, complacent market that we were in before. But for now, there's no real reason to be panicking out of long-term positions, although we are expecting a short-term correction. So that really depends on your trading style, whether you want to participate in shorter-term trading or in longer-term investing. Now, that's about all I wanted to cover in this episode. I hope you guys enjoyed. If you did, make sure to smash that like button and subscribe to the channel if you haven't already. Now, in the meantime, good luck on your trading and see you next time.